Why are you more broke today than you were yesterday? And it's not because you spent too much money on a microphone yesterday that turns out to not work. Because $20 seemed like a good deal, but now you regret it. It's actually because of this sexy, not sexy thing called inflation. Inflation is pretty much the idea of that it's not that goods become worth more, our dollar becomes worth less. This is kind of like the fun thing I learned in business school, but if you keep that dollar in a savings account, you're actually losing money on it compared to if you put it into an investments portfolio that's adjusted to beat market inflation, but it's not so risky you're gonna lose it all. An outfit change into investment minded and girly. Now. I said now. I said it never transitions when I want it to transition. Oh, this is also bleak. What can you do to not get screwed over by inflation? And let me be clear, I'm not an investments professional or a finance major or trying to give you investments advice because the truth is, I don't know crap. I'm giving you a panic attack. I decided I would calculate how much this book would have cost me the year I was born compared to how much it costs me now. I bring my computer over because I don't do the maths. So my $20 book that I just showed you in the year that I was born, the beautiful year of 2002, it would have been $11.46. The average house in 2002 was like $228,700, which in today's money is the equivalent of
399,263.93 centis.
Think like 74% inflation. Now that's like pretty big in inflation. The average cost of a home, which I found off the internet and then used ChatGPT to figure it out, nowadays is roughly $420,800 on the dot. I'm not gonna sit here and be like, I understand everything about inflation and you're just gonna be broke more each day and you're actually not getting compensated enough and just make your life seem horribly miserable, because that's not who I am. But I do want to talk about the importance of understanding inflation and how to not become worth less each year and instead accumulate wealth. Two big types of inflations that you kind of need to understand, and this is such as demand pull inflation, which happens when demand for goods and services exceeds supply, and cost push inflation, which occurs when the cost of production increase, which leads to higher prices for consumers. For years, the government has been battling inflation, and I mean years, guys. This is not investment advice. This is all stuff that I have done myself that has helped protect me against inflation, along with stuff I learned in business school as a business major. Key to investing is to pick a tried and true strategy and stick with it. Strategy is your ride or die. I am a tried and true value investor because I have really bad anxiety and the market scares me. But you know what doesn't scare me? Growing wealth gradually over a long period of time and maybe one day in the future being able to retire. In other words, I'm a Buffettology baby. Now the thing is there are a lot of different investment strategies. You have buy and hold, which is where you invest in securities and you hold them for a long period of time, regardless of market fluctuations. You have dollar cost averaging, which is investing in a fixed amount of money at regular intervals, regardless of an asset's price. You have dividend investing, which is investing in companies that regularly pay dividends. If you don't know what a dividend is, it's like they give you a little reward. They're like, ooh, you did well. Here's a little like treat. That's kind of what dividend investing is. You have growth investing, which is investing in companies expected to grow at an above average rate compared to other companies. You have value investing, which is the type of investing I like to do, which is investing in undervalued companies with strong fundamentals. Index fund investing, which is investing in index funds that track specific market index, such as S&P 500. You have asset allocation, which is diversifying investments across various asset classes. I do think it is very important to make sure that all of your portfolio and stuff is diversified. Not too diversified, but diversified enough to protect you against market fluctuation. You know the saying, don't put all your eggs in one basket. It never goes well. Real estate investing, which is investing in physical properties or real estate investments. REITs. REITs. You have fixed income investing, which is investing in bonds and other fixed income securities. You also have mutual fund investing, which is investing in mutual funds which pool money from many investors to purchase a diversified portfolio of securities. You have peer-to-peer lending, which is lending money directly to individuals or businesses through online platforms. They're high returns, but a lot more risky. Be careful. You have cryptocurrency investing, which is investing in different currencies, such as Bitcoin, Ethereum. You have hedge fund and private equity investing, which is investing in hedge fund or private equity funds, which use sophisticated strategies to generate returns. Those are investment strategies, like a few out of so many, because there are so many. Like there is a never-ending list of how should you invest. The reality is I think each person's different and they're gonna need different things and want different things, and you should go the route that makes you feel most stable. Because investing is the equivalent of dating like a toxic ex, and you need him to be as calm as possible. Your emotions are gonna be everywhere all the time. So this is how I've been protecting the value of my dollar. While I won't share the specifics, I will give you a general idea of how I've done it. I've spent a lot of time putting my money into index funds, such as the S&P 500. The reason I put it in the S&P 500 is because over time, and I mean time, the S&P 500 is like old. So according to ChatGPT, the S&P 500 is roughly 600, oh my god, 67! Survived a lot of different crashes. You have the crash of 1987, you have 2008, you have 2002, you have pandemic. It survived stagflation in the 80s and 70s, I don't know, in the rock age. S&P 500 has had a stronghold, and that's why I've put my money into it, because I trust due to all those years, it's going to maintain that. Now, that doesn't mean it will, but it does mean that I have more trust and faith in it, and that therefore it like soothes my anxiety. And the reality is, according to this book particularly, you don't lose all your money in the stock market unless you pull your money from the stock market. Now, I know that heavily depends for each person for their financial situation on whether or not you have to pull or don't have to pull, but holding on investments that have been proven to hold previously usually goes over better. Another thing that I do is I follow Buffett. Warren Buffett. Daddy Buffett. Not daddy, sorry. That would feel weird. That is weird. I know that makes me sound very frat boy. He wasn't somebody that decided to get rich quick. He instead decided to build for longevity and take time to get rich. But personally, I think that's the right way to do it, or at least that's the best way I want to do it. When you're in your 20s or when you're younger, you pretty much are given this leeway of you can make riskier investments because you have more time to recover money. And the reality in the stock market, or just markets in general, is time equals money, and over time you build more money. But as a girly with extreme anxiety, like bad anxiety, I want to make money, but I don't want to take the extreme risks that other people are more comfortable taking. Now, while there are plenty of other things that you should be doing, another thing that I highly recommend doing is making sure each year your wage is adjusted for the inflation that occurred that year. I had a friend get a promotion, right? But it wasn't the amount of which the inflation had occurred. It was right below inflation amount. She got a 2% raise. Inflation has been going around 3% for a minute, which means she's making less in value than she was the year before, and therefore that's actually reducing her wage along with her buying power. I cannot speak enough how vital it is to make sure that each year you are adjusting your wage to inflation. And that should be a conversation that you should be able to have with your bosses if they're good bosses. Now, there is a professional way to approach it, and you have to be polite, and you have to be kind, and you have to be very upfront and present the facts, but you don't want to get screwed over because you're not adjusting your wage each year. Now, this video is getting a little long, and I don't want to edit that much because I like editing, but I don't like editing. So I'm gonna cut her here. But if you guys want more tips on how to fight inflation, or things that you can do, or if you think it's helpful, or if you don't think it's helpful, just leave your questions in the comments. Tell me what you want from me. I'm a people pleaser. I'll do it.